Okay, recording this video Wednesday, 15th of January 2014. It's 1:32 p.m. Chicago time. Recording this video before the close of trade. Done my trading for today. Hope you had a good day's trading. And well, bit of a surprise to me. 2-day rally after Monday's sell-off. We had extreme kind of selling down here, exhaustion patterns, and I suppose we just must have run out of sellers at that point. We've got a blue professional bar coming in at cyclical support, and we've come back up. I would have thought we'd have come back up to the bottom of this kind of congestion zone around that 1826 number that I said was kind of key at the end of last week, but no, we blasted through that yesterday and kind of kept on going today, and we're back up to another kind of key number, which is the high that we had at the end of the Christmas rally up here, up in the 40s. So today has not been a reversal day. We kind of have ran out a little bit, but don't forget it's cyclical resistance here on the 40,500 tip bar chart. And if you go down to the lowest time frame associated with that time frame, which is the 4,500, we have put in a nice exhaustion pattern with the exhaustion buying on a left shoulder followed by bearish divergence, a nice pullback to end of trend, and the testing up that we're doing at the moment is professional up bars, blue professional up bars, maybe taking the last chance to kind of get short into that little bit of a rally. You can see how weak it is in terms of buying on better momentum. Who knows? Tomorrow 1840 is kind of the key number, so if we start to crack through that tomorrow, that'll be kind of interesting for the start of that kind of reversal move. But we missed our window. 11 a.m. is kind of the window for a reversal day. If we don't really start to reverse by 11 a.m., all we're going to do is just play out to the end of the day without a proper kind of strong trending move in the opposite direction. But anyway, that is not what I want to talk about. I want to talk about a rule of thumb, which is talking about flat tops. I've got about half a dozen kind of rules of thumb when it comes to my day trading, and one day I'll put together an article with each of them kind of clearly laid out. And today we had an example, a great example of one of them, called "The Market Does Not Like Flat Tops." And so I want to record this video in order to kind of get that ready to go when I put together that rule of thumbs type article. Anyway, so let's talk about today's trade. Yesterday we had this strong kind of up day, and we ended up with a little bit of an exhaustion pattern. Kept on going overnight a little bit, and I always say, look, if we're going to get a reversal, the professionals are going to use the full liquidity of the day to reverse this. So we'll need to see an exhaustion pattern during the day session. So we had an exhaustion pattern at the end of yesterday, but look for one during the full liquidity of the next day in order for the professionals to really take advantage of kind of getting out and reversing their positions. So we're kind of looking for that the first thing this morning, and we get a little bit of strength to kind of start with. I'm just going to zoom in on this a little bit. So we rally a little bit, blue professional up bars, and the reading we get on better momentum was fairly strong. It was about 7,000 or 8,000, which is usually a fairly kind of good reading for some kind of exhaustion pattern. I'm starting to think, well, is that enough to kind of reverse this thing around? We get a little bit of weakness, we start to kind of sell off here. And I'm looking at these highs that we're making at this point and saying, no, this is not going to be enough buying to reverse this. We're going to have to wait for a proper exhaustion pattern before setting up for some kind of reversal activity. And the reason for that is we've got all of these highs being made at exactly the same number. They're all 39.5. Now, I'm just going to go down to the 500 tip bar chart where I can show you this in a little bit more detail. The reason why we were going to go through those highs is the market does not like flat tops. It does not reverse around a flat top. It usually spikes for a reversal. So here we go. This is the beginning of the day on the Wednesday. We have a nice little kind of strong move up here with exhaustion patterns, but we kind of test into a Rambo pattern and we start to sell off. We start to sell off, fairly hard, bit of an exhaustion pattern on the 500. Blue professional bar steps in. We come back again, another Rambo pattern up here, and we hit this number 39.5. You can see we hit it a good dozen times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and so on. That is a flat top. So we see 39.5 is hit a dozen times here. We come back and we start to sell off. We break through a support level on 500, showing it's a little bit weak at this point, but we come into flush patterns and Rambo patterns kind of down here, and I'm starting to think, well, are we just going to fall out of bed at this bottom of this channel into a downtrend? Certainly the amateurs are thinking that. That's why we've got a Rambo pattern with the amateurs kind of selling down, expecting to break to new lows and get our reversal here. My instinct is to say no, because we've got this flat top, the market is going to spike through it and it's only going to start to reverse after we see that kind of spike through certainly 39.5. That's exactly what we get. So it bounces off that Rambo channel. We've got a nice little Rambo to Rambo channel. So we've got amateurs buying here, then reversing. They've kind of realized they may be going the wrong direction. They're starting to short down here. They get that one wrong as well. The market starts to rally up. Through 39, we get some blue professional bars buying a breakout through that channel, and then we start to set off to the upside. So we know it's going to go above that 39.5 level because that is a flat top. And then on the 1500 tip bar chart, you can see there, that's the blue professional bar kind of taking us through that channel, and that's the first sign that we see an exhaustion pattern kind of coming in. So it's only after that in the bearish divergence can we start to consider that there's an opportunity for a reversal trade. We get a nice little double top here, Rambo and Rambo pattern, just showing the highs there. Amateurs getting wrong foot at those news highs, and we start to sell off. And it's quite strong selling at that point because we get an exhaustion selling signal. But it comes into support at 1840, and we just hold there. Now, the reason why the market does not reverse at this point after we've had that activity is we get these three little blue professional bars. We get a blue professional down bar here, kind of one or two in a row that they're catching that little bit of weakness there. This is what I talk about being a U-turn. So blue professional down bar, another one kind of steps in at that point. As soon as we're breaking above the highs of that, they're using that little retracement to get short, to get long, and buying up the little strength that we have. That's a U-turn kind of going on, and that's when we go break to new highs, make another exhaustion pattern here up at 46, where we can kind of find an extreme level there. So we knew we were going to break through this 39.5 level because it was a flat top. Market doesn't like flat tops. It likes to spike to highs. We knew that this was not the breakdown level because support held, and that little blue professional bar there in the middle was a nice little dip that they bought, and you could see the strength of the buying with them buying that U-turn with the third blue professional bar. And then when we get the exhaustion pattern, that's showing the blow-off move. We get a bearish divergent, testing back up, and so on. And the move that we've got at the moment that's just kind of coming back into those highs, it's a lower high going on, so we've got resistance, resistance, resistance. These resistance points have not been broken, so that shows the market is not strong enough to take us through resistance, so therefore it has weakness. We've fallen through support and caught by these blue professional bars, but that just shows the market's weak at this point. So now on the 1500 we've made another exhaustion, bearish and flush pattern kind of going on here. Amateur up bar into that 44 level, kind of turning around. It's not going to break today most likely. We've got an hour or two's trade to go, but because the reversal hasn't happened by 11 a.m., not expecting this to be strong move, certainly not trading it. But tomorrow potentially that's an interesting kind of move. So that's the little kind of rule of thumb I use. Flat tops are always going to be broken, so if you see some activity like that and you're starting to think, is this market kind of starting to roll over if we get some weakness? No. The highest probability trade is that we're going to break above that flat top and go to a spike kind of high. And if you can see today's activity, the high was made by one or two bars at the top up here. It wasn't a whole series of bars like we saw on the 1500 or the 500 tip bar chart. So there we go, a little rule of thumb to kind of bear in mind when you're looking for reversal points. The market does not like flat tops, and it'll spike through them to find the correct kind of reversal point. There we go. Hope your trading went well today. Looking forward to tomorrow. No, reverse gone long 39 even. Long 39 even. And just checking my stops and targets. So we're long again here. Just this is a flat top. Market does not like that. It's going to spike through 9.5 level. So Rambo pattern here. Amateurs going short way too early. Okay, blue professional up bar here. Here we go. So we'll get up to 9.5 again. There we go. Spike through 40. Run those stops. 4,000 on better momentum. All right. Who knows if it'll reach my target at 43. But 11,000. There we go. That's what we want. Exhaustion buying. So this is cyclical resistance going to come in on these two time frames. That's the run we wanted in order to end this uptrend. So I'm going to at least wait for bearish divergence on 500. There's resistance, all the blue professional bar, blue professional bar. Okay, so let's try and get out of this with something decent. Just move my target to 42. Target's at 42. Let's just see if we can get past this 1.5 level just on a little bit of a final rush, just because we're going to put in bearish divergence here. We've got pro signal exits. Just give me a fraction more. Go just out 42.43, which is good. So let's leave it there for the time being. This looks like it's going to set up bearish divergence. We've got all these blue professional bars kind of coming in, potential reversal. I suppose it's probably going to get to 43s maybe, but we'll see. Just got long 41.50, long 41.50. Checking stops and targets, and doesn't want to break down quite yet. We've had exhaustion selling down here on 1500. We want to roll around. Exhaustion buying bearish divergence, double top with rainbow patterns up here. But this little dip down, blue professional bars kind of picking it up, and we want to break above the highs of that, jumping out a little bit early, but break above resistance here would take us into another trend move. I don't know if this thing wants to. There's blue professional bar. It's almost like a U-turn. Here we go, kind of chasing it up. So maybe this is going to come around a little bit later and show us our pullback to end of trend. But it wants to test back up to 43s. Things never, roll around neatly. They just push and test all the time. So target's way up at 45s. Don't think it'll get to that by any means, but a push back up into this 43 region, blue professional bars kind of coming back in. That would be good for a signal to roll around. There we go. That's all the blue professional bars on this little U-turn. Bang. So we need to continue above to 42. And this thing looks like it's going to wrap around and put in our pullback to end of trend on the 4500 tip bar chart. So let's break to 42. Get us confirmation that we're going up. Oh, alright, there we go. We're back up to 43s again. And our high is 43.25. Going to run some stops. It's kind of like a flushing out pattern. So they bought this little dip. The average trade size is very high through this little dip here. And there we go. So previous high, there we go. Run our stops, 375. My target's at 5.5, which does seem like a long way away. Maybe going to move that to 4.5. But this thing's got to run pull back to end of trend, and I think this is a little bit needs catching up. Whoa. Wow. All right. No blue professional bars yet. So let's keep it at 5.5. See if we get lucky on this stop run. Whoa. Again, no blue professional bars coming on, even on the 500. So let's just leave it. Bingo! Just taken out. 5.5. Unbelievable. 17,000 on better momentum. Just showing the exhaustion here. And there's the first blue professional bar coming on 500. We've not seen one yet on 15. I'm quite happy with that. All come off this little dip where the professionals bought it, and a U-turn, and bang, all the way back up. So 4 points, excellent. So I'm going to stop there, 4 3/4 after 6 trades. Tried to get this short kind of trade going. Tried it 1, 2, twice into that lows and just didn't want to break. So I still think it's going to, was it 10 a.m. Got time for a reversal day. It's all, these look like real exhaustion patterns. But let's wait and see. There's the exhaustion pattern here. No blue professional bars on 15. I can't believe it's going to run even higher. But anyway,